More so than Bitcoin, some would argue that data is our true modern currency. As people, we use and consume more data than ever. Companies like Alphabet and Facebook are happy, sometimes too eager, to offer tools and services for free to help us produce and consume data. This also means that the new definition of wealth is having access to information, and not just any information. Information that is relevant and timely to what we're doing. Oh, and we also like for that information to be accurate. Taking that analogy further, most operational folks would say that servicing remains poor when it comes to accessing and using corporate data. This seems especially true for investor accounting and reporting teams. It is also commonly misunderstood as an IT issue, but it really isn't. Let's explore some of the data sources and their challenges. For investor accounting, there are three main sources of information. There's a bank statement and the servicing system. We already talked about those. This leaves us with wire and electronic transfer information. Those are wires and ACHs. The focus for today will be in the treatment of manually created settlements. These are money movements not initiated by the servicing system. People sometimes call these manual payments. These could be manual payments funding a custodial account to cover a reconciliation outage, or keep track of a particular settlement that for some reason cannot flow through the servicing platform. At first, you'd think the wire process is really simple. After all, we're looking for five things: where the money is coming from, where it's going, the amount, the date, and some approval. And the process really only has three steps: initiate the payment, have it settled with the bank, and receive confirmation of the settlement. Well, at least that's usually true for Treasury folks. They usually have access to a Treasury system or the bank portal, so their process simply follows the system. Problem is, many times departments within servicing don't have access to the bank or to the servicing or to the Treasury system. This problem becomes more complex as you add more banking relationships to the mix. From my experience, I've seen dedicated wire rooms complete with lock and key, still pushing paper requests and approvals. But reality is most shops fall somewhere in between where there's no formal application, but a process is established to get settlement information to Treasury or to the bank. For most shops, this typically means analysts are to fill out a wire request form in a spreadsheet template. Then, place the file somewhere on the network drive for processing, plus or minus some bells and whistles for automation. Assuming good controls are in place and audit gives it a thumbs up, whatever business process is defined becomes policy, and it tends to remain untouched and mostly unattended for a long time. Slowly but surely, process owners will start seeing some issues with the process, a result of enforcing action using policies and procedures alone versus relying on some systems controls. It's inevitable. Again, coming back to process, it's not hard to spot inefficiencies. A good way to do this is to ask what should be simple questions like, how are approvals being captured? How many times are these getting processed? What's the error rate? Are we getting notifications for successful transfers? What about rejections? How are those being communicated? And just when we have things all figured out, the business changes and we need to adjust. Then we start thinking about questions like, does every bank follow the same process? What happens if we add or change a banking relationship? Because every situation is a little different, I'll just say that it's worth looking at the process to make gains in data quality. Any efficiency gains here directly translates to a better data down the line and a smoother process. This brings me to another big issue with electronic transfer information, and that's the data quality. And here's where we tie it back to the process. Remember that spreadsheet template we talked about to capture settlement requests? Well, chances are there's some process or automation that expects these files to be formatted the same each and every time. Maybe this is what is sent to Treasury for wire requests so that servicing can participate in their process. Even with all the workbook protections and cell locks available, I guarantee that the template will become altered or changed at some point, thus breaking the cycle. We're talking about general settlement requests here, essentially providing an amount to be moved between two accounts along with some approval saying that it's okay. Now let's add a little more complexity and take department-specific information needs that may be tied to their request. For investor accounting teams, this means also capturing loan-level information related to the transfer. Without it, the team would not be able to to settle borrower information, well, at least not easily. Yeah, it's a kind of a big deal. This adds another dimension to consider surrounding data availability. Even with access to bank or to the Treasury workstation, would there be a home to store loan level information? Probably not. A recommendation for managing electronic transfer information is to put it in some sort of formal system, and there's plenty of options here. Maybe you could go small and tactical by creating a mini system just to capture loan level details that link back to a wire request ID. It's simple, but that would solve a big problem for investor accounting. There's also several systems available in the market. I've been told we make a good one. Whatever the options, I recommend looking at a system that does the obvious. It creates, processes, and tracks electronic transfers, but one that also can track related information, like in our example. I hope you found this information helpful. Please feel free to reach out with questions.